Prashant Kumar, who completed his tenure as the managing director and CEO of Yes Bank on 5th April, is a deeply satisfied man. After a career spanning 42 years, mostly with the State Bank of India, where he started out as a probationary officer in 1983, he is now looking forward to a happy, retired life. His last assignment was, after all, among the most arduous of his entire career. It was a never seen before experiment in Indian banking to resurrect a broken bank, protect its employees and depositors, and get it back on its feet, all through the thick of the pandemic and the associated lockdown. Yes Bank had started going under from about 2018, weighed down by mounting bad debts, regulatory violations, and dwindling deposits due to a collapse of customer trust. It was pieced back together by a cast of characters that has largely gone unsung. Prashant Kumar himself, veteran banker Sunil Mehta, chartered accountant Atul Beda, and consultant Mahesh Krishnamurthy, along with two independent directors each from the SBI and the Reserve Bank of India, on the board. The government stepped in to save a private sector bank, designed a reconstruction scheme led by the SBI along with other players such as HDFC, Axis Bank, Kotak Mahindra Bank, Bandhan Bank, Federal Bank, and IDFC First Bank. It got the best brains in the industry on the bank's board, which, with all unanimous decisions, revived Yes Bank. The shareholders saw their money severely diminished, but not a single depositor was impacted. Customers were angry, even violent at times, and employees got dejected and anxious. But the management and the board worked together, the management working inside out and the board outside in, to script one of the greatest success stories in Indian banking. This is the only bank across the globe which has gotten back on its feet with the same brand name as it was before. Otherwise, all other banks either perished or merged. Yes Bank Executive Director Rajan Pental, who was a member of the senior management when the bank was in the thick of the crisis, told ThePrint. According to the bank's latest results, its net profit for the fiscal 2025-26 was rupees 3476 crore, up from 44.5% a year ago. At the end of the fourth quarter, the capital adequacy ratio, which is an indicator of a bank's capital strength against its risk-weighted assets, was 15.3%. Private banks, the RBI guidelines stipulate, need to maintain the ratio at 9% on an ongoing basis. In the quarter ending 31st March 2020, the capital adequacy ratio had slipped to under 9% at 8.5%. The latest results for the fourth quarter of 2025-26 show that the gross non-performing assets have fallen to 1.3% compared to 16.8% at the end of the fiscal 2019-20. Net NPAs have dropped to 0.2% from 5% in the same period. In the quarterly earnings call on Saturday, Yes Bank's new MD and CEO Vinay Tondse said the NPAs were the lowest in the last 24 quarters. The liquidity coverage ratio, which is a measure of the bank's high-quality liquid assets, has also significantly improved to 119% from just 34% in fiscal 2020. We've done so many things for the very first time, Prashant Kumar said. We raised rupees 15,000 crore during a pandemic. We brought in an asset reconstruction company to take on a large amount of bad loans, and we have brought a global bank as a strategic investor, Prashant Kumar said. In September 2025, Sumitomo Mitsui Banking Corporation, or SMBC, became Yes Bank's largest shareholder by acquiring a 24.9% stake from the SBI and other investor banks that had participated in its reconstruction. It has been a very satisfying journey, Kumar said, because all the objectives that we had set out for ourselves have been fulfilled. I'm now looking forward to a happy retired life, a break after 42 years of service. He had taken charge as the Yes Bank administrator on 5th March 2020 when the RBI superseded the board, citing serious deterioration in the financial position of the bank. He then became its MD and CEO on 26th March, staying on for over 6 long years. Many people, Prashant Kumar said, have suggested that he should use his retirement days to write a book on the entire exercise. And I always joke, he said, that we are in Mumbai, the land of Bollywood. Why not a film or a TV series instead? Banking and finance and all the jargons and decisions involved in their universe can be really dry. But seen through the eyes of the board members who led the reconstruction from the front, the story is nothing short of a thriller. Sometime in March 2020, Sunil Mehta got a call briefing about the union government and the RBI's intention to reconstruct Yes Bank and inviting him to join the new reconstruction board as its non-executive chairman. He was given just a couple of hours to think about it and get back with his decision. Mehta had handled a fair share of turbulence and crisis management at the executive and board level. He was the country head of AIG India from 2000 to 2012, including the time of its near collapse during the 2008 financial crisis. And he was also the non executive chairman of the Punjab National Bank during 2017 to 2020, where he had to clean up after the multi crore fraud involving jewelers Nirav Modi and Mehul Choksi. Sunil Mehta told me, I put the phone down, I spoke to my wife and said, this is not an easy situation, but it is what it is. And she said, if you feel like doing it again, go for it. The choice is yours. Before he knew it, he was giving his confirmation to take up this next big challenge of being the non executive chairman of the Yes Bank Reconstruction Board. I knew that it would take up a lot of time and serious effort, he said. It will not be easy, and the credibility risks are higher than any potential upside if we do not succeed in this complex reconstruction. But I asked myself, was I the cause for the bank to be in this situation? No. Could I use my experience to improve it, contribute to its success, and address a national issue? Yes. The veteran banker, who later went on to battle turbulence at the IndusInd Bank as well as its chairperson, added that a lot of what he had experienced in Punjab National Bank helped him to not get overawed. Between fiscal 2015 and 2018, Yes Bank, which was incorporated in 2003 by Rana Kapoor and Ashok Kapoor, had one of the fastest growing balance sheets. Ashok Kapoor was killed in the 26/11 terrorist attacks in Mumbai. The bank had a strong growth in lending, with net advances having swelled from 75,500 crore in fiscal 2015 to 2.41 lakh crore rupees by fiscal 2019. The growth was, however, largely driven by concentrated corporate exposure, with corporate banking comprising 66% of the total advances by fiscal 2019. One by one, several of these large loans, DHFL, ILNFS, SL Group, Jet Airways, and those connected to Anil Ambani's firms, faltered, leading to a crash. Between fiscal 2019 and 2020, gross NPAs surged to 16.8% in fiscal 2020 from 3.2% in fiscal 2019, while deposits more than halved from 2.27 lakh crore to rupees 1.05 lakh crore. The RBI had been raising governance issues and alleged underreporting of bad loans since 2017. In 2018, it refused to extend the term of Managing Director Rana Kapoor, who had to step down by January 2019. He was arrested in March 2020 over allegations of money laundering, financial irregularities, and receiving kickbacks for loans. Kapoor spent 4 years in jail before getting bail in all the cases against him. His wife Bindu and daughters Radha and Roshni also spent some time behind bars. Rana Kapoor, in multiple court filings, has denied these allegations against him. On 5th March 2020, the RBI finally took over Yes Bank, putting it under a moratorium and bringing in Prashant Kumar as the administrator. The senior management set up a war room to handle the crisis, the third time that it was doing so since 2018-19. The first time was in 2019 when the RBI appointed Ravneet Gill in place of Rana Kapoor as Yes Bank's CEO and MD. The second time was again in 2019 when the PMC Bank collapsed, impacting the confidence of depositors. Rajan Pental said the war rooms were set up to ensure uniformity in communication, ensure all channels, whether physically or electronically, had enough cash and technological limits, uniform customer outreach, compliance adherence, and regulatory reporting. By the third time, we had seen various things: a change of guard, the bank not being able to raise capital, so we were already trained to handle a crisis. We were doing early morning calls at 5:36 a.m. to ensure complete institutional preparedness for when the branch opens for the day. Our objective was clear: the bank should maintain a common narrative when employees speak to customers. Rajan Pental, who was then the head of branch banking, retail assets, and the bank's MSME and cards business, said, Within 24 hours, the RBI published a draft reconstruction scheme and a week later, a final reconstruction scheme on 13th March. SBI invested rupees 7250 crore in the bank for a 49% stake. Sunil Mehta said, dealing with the PNB case taught me a lot. It was a massive fraud in a public sector bank. You can imagine how many agencies came into the picture, the kind of pressure and public scrutiny the bank and the board had to face, Mehta said. The challenge of reconstructing Yes Bank was no different. And personally, Sunil Mehta said it was also one that helped him separate the men from the boys in the industry. He and his colleagues leveraged all their resources, contacts, and network for the success of the novel experiment. The other two directors that the RBI named were Mahesh Krishnamurthy, who was heading a global consultancy firm at the time, and Atul Bheda, a chartered accountant. The board also included nominee directors from the SBI and the RBI. The group had an initial informal meeting first at the Oberoi in Mumbai with members from the SBI as well as the other banks part of the reconstruction process present. And that informal meeting was the last time that the board members Prashant Kumar, Sunil Mehta, Mahesh Krishnamurthy, and Atul Bheda met in person. Little did they know that the next time they would get to shake hands would be when the bank had already, by and large, stabilized. The beginning itself was challenging. The COVID pandemic had struck, and the board's first meeting was shifted online. It lasted nearly 10 hours due to the urgent matters that needed immediate attention, the board members recall. And from there on, almost everything else, right from running employee accountability processes, bringing new deposits in, and marketing the bank to investors, everything was practically done virtually. Mahesh Krishnamurthy said it was like watching a soap opera unfold on your screen. He said, from my perspective, it was almost a full time job as it was for all the other members because we were in crisis mode. We had to deal with a variety of different aspects. I have vivid memories of board meetings lasting 7 to 8 hours and often longer. Sunil Mehta, Krishnamurthy, and Prashant Kumar recall how not a single decision was passed with dissent. It was all about teamwork, they said. Members didn't always agree with each other, but there was a genuine effort to build consensus. When you are in a crisis, the unanimity of the board is very important, Sunil Mehta said. There will always be differences of opinion. The head of audit will look at it differently. The risk management committee chair will have a different view. The board chairman will look at it differently. But it is not a conflict. Board members must express independent opinions. As a board chair, you have to encourage members to come to a unified conclusion in the bank's interest, Mehta said. The first major milestone for the board was its follow-on public offering in July 2020 when it raised 15,000 crore rupees, which enabled the team to take a second milestone, which is return the special liquidity facility that it had borrowed from the RBI. The facility was initially for 3 months till June, and the RBI had already extended it by another 3 months until September. The FPO was a make or break situation for us, Prashant Kumar said. He decided to go against the advice of merchant bankers who suggested that Yes Bank should probably go in for just half the amount and that too in two tranches. As per SEBI regulation, Prashant Kumar said if you don't mobilize 50% of the amount, then the issue would fail. And if the issue fails, you can't go to the market again before 6 months. And then you may not sail through. For the FPO2, the board conducted almost the entire exercise of investor engagement online. Prashant Kumar would sit in the erstwhile Yes Bank office at Indiabulls Finance Center with a very lean team of executives present with him. He would attend calls with overseas investors at all odd hours, 2 a.m., 6 a.m. He said we would eat khichdi every day because that was the only food that was being served to us at the time. There was some investor comfort given that SBI and several other strong PSBs had come together to resuscitate Yes Bank with the government's backing. And secondly, the issue was priced at as low as 12 rupees a share. Prashant Kumar said from a normal mindset, getting a bank share at rupees 12, everybody thought it cannot go below this. It only has to rise. The FPO had a 3-day window. On the third day at about 12:30 p.m., Prashant Kumar was sitting in his office, sipping coffee and watching CNBC. Yes Bank was at 45% of the desired amount. Prashant Kumar recalls that his CFO came to see him and said, how are you able to sit here and sip coffee when we are nowhere close to our target and there are just a few hours for the markets to close? In a lighter vein, Kumar said, We've done what we could now. Now, what can we do other than sitting back and sipping coffee? Then, at about 3:25 pm, 5 minutes before the markets closed, there was a flash. The issue was successful. Kumar and the entire board felt a sense of vindication. The Yes Bank was able to raise 13,700 crore rupees and the underwriters supported the bank on the rupees 1300 crore shortfall. The FPO was the second largest in the Indian capital markets, doing so during the peak of COVID within just 3 months of the reconstruction scheme was a remarkable feat, Sunil Mehta said. In 2022, the Yes Bank got another major capital infusion when it sold shares and warrants to private equity firms Carlyle and Advent for up to a 10% stake each, raising 8898 crore rupees. When I visited the Yes Bank headquarters at Santa Cruz last month, it was a regular Friday afternoon. A few employees were mulling around in small groups with ID cards hung around their necks, and the sun permeating through the glass structure, lighting up large parts of the spacious office building, was getting dim as early evening approached. It looked less like a bank and more like a welcoming campus with a huge lawn, greenery, and abstract art. The bank's headquarters in Santa Cruz is one of its takeaways from the crisis. Literally, one of its biggest challenges for the board was to get money back from some of the large corporate borrowers who had defaulted and dragged the bank down. What complicated the situation was that a significant number of these loans were from sectors such as real estate and hospitality that were anyway down during the pandemic. Sunil Mehta recalls that some were willing to come to the table and negotiate, some were in a genuinely difficult situation, some were just recalcitrant borrowers. It was a combination for all of them, and there had to be different strokes for different folks. For some, the bank had to initiate legal action as required. The board and the management were prepared to take tough decisions without fear or favor as required, Sunil Mehta said. The board also empowered the management to take tough decisions. We said we cannot take haircuts just because someone is being difficult. Case by case, the board and the management worked out the best possible settlements. The Santa Cruz headquarters was one such, a debt asset swap deal with the Anil Dhirubhai Ambani group, where the bank took over Reliance Center, located on a 21,432 square meter plot, along with two other properties in South Mumbai after the Anil Dhirubhai Ambani group failed to repay 2892 crore rupees. Yes Bank had said that it sought to recover the money in May 2020 and took possession of the three properties in July after the Anil Dhirubhai Ambani group failed to repay the debt despite a 60-day notice. At about 12 pm on 31st March 2021, members of the Yes Bank management were at the registrar's office getting the registration for the property done. In June 2021, the office moved. It was a renewed bank with a new headquarters. By the end of fiscal 2021, gross NPAs were at 15.41% as compared to 16.8% a year ago. By the end of fiscal 2022, gross NPAs further dropped to 13.9%, and the year marked the first full year of a return to profitability after fiscal 2019. Yes Bank recorded a profit of 1,066 crores as compared to a loss of 3,462 crores a year ago. The pool of stressed assets was so large that Prashant Kumar said he was spending 80% of his time in recovery and resolution, and that too wasn't moving the needle beyond a point. He said, as a bank, if you live with such large NPAs, recovery will happen only over a period of time. But when you go to investors, you say, my gross NPA ratio is like 18%, 15%. How will investors get the confidence? So we thought, why not have a transaction where this pool can be given to someone? And that's how Yes Bank agreed to offload up to 48,000 crore of its stressed assets portfolio to JC Flowers Asset Reconstruction Company Limited. It did so after a rigorous bidding process. In the words of the JC Flowers CEO Chris Flowers, it was the single largest transaction of the sale of non-performing assets in the country's banking system so far. JC Flowers bought the portfolio for a total consideration of 8046 crore rupees. The deal had a 1585 structure, which is commonly used in asset reconstruction deals, where JC Flowers paid 15% of the total consideration, which is 1206.9 crore rupees upfront, and issued the remaining 85% in security receipts, which are essentially deferred payments. Yes Bank receives payments on the security receipts only when JC Flowers recovers money from the borrower. Post acquisition, JC Flowers ARC will act as the manager for the portfolio workout to optimize recoveries with a number of key personnel having worked on the portfolio at Yes Bank. The ARC purchased a 15% vertical slice, while Yes Bank will retain the rest in the form of security receipts, JCF said in a statement in December 2022. JCF said in a statement in December 2022 on the conclusion of its deal. In its quarterly earnings call on Saturday, Vinay Tondse said the bank still has about 1500 crores in security receipts that can be redeemed over the next few quarters. Yes Bank also agreed to purchase an equity stake of up to 19.99% in two tranches, ensuring a share in JCF's profitability. Initially, the bank acquired a 9.9% stake in the asset reconstruction company. There were two occasions when I thought that things were finally getting under control. The first was the private equity infusion. Companies had to be convinced, we had to show them the upside of what a reconstructed bank will look like. And the second one was when distressed assets taken over by JCF and suddenly our NPAs dropped to about 2.2% as gross as of 31st March 2023 from over 13%. Sunil Mehta had mentioned the JCF deal in his speech at the annual general meeting of the bank on 15 July 2022, the day he stepped down from his board chair role on completion of the rescue plan and made way for a new regular board. The JC Flowers mention was a last minute addition in the chairman's speech, with hectic negotiations underway between the management and JC Flowers till the 11th hour. He said, I'd left a paragraph open regarding the balance sheet I had left a paragraph open regarding the balance sheet restructuring and the sale of stressed assets. While I was delivering my speech, someone from the management gave me a note that the sale transaction had been finally signed and executed. And so I read that part before concluding my final chairman speech at Yes Bank, Sunil Mehta said. He then had a warm farewell over lunch afterwards. For the Yes Bank management and also its board, the biggest challenge was managing the morale of its employees and enabling them to face customers. Rajan Pental remembers the night before the moratorium on withdrawals was supposed to be lifted on 18th March 2020 at 6 pm. He said, we started preparation in the middle of the night. A lot of people would be coming to branches, senior citizens, ladies, children. The message to all teams was to service the customers with folded hands and a smile. We told our employees that there will be situations where you will face abuse or harassment, but you have to handle them. Getting into an offense would severely impact the reputation of the institution, Pentel said. On that fateful day, there were instances of 2 or 3 branch members being attacked, glasses being broken at a few places. We were doing hourly calls at the branch levels, Pentel said. There were war rooms created for each zone. Yes Bank also boosted the technological capability of its digital banking channels to ensure customers don't get stuck. The message was that your money is safe and you can choose to withdraw it at any point. The senior management personally made calls to depositors to assure them that in the history of Indian banking, no depositor had ever lost money and that Yes Bank is being turned around and their money is safe. CEO Kumar himself was calling 10-15 customers every day. The board and the CEO also ran a stringent staff accountability process where key employees were given a chance to come before the board and be heard. There was a lot of finger pointing going on back then. The easiest thing for us to do would have been to let go of anybody who we thought was affiliated to some of the questionable decisions that had previously been made, Mahesh Krishnamurthy said. But we wanted to be fair and needed the institutional knowledge to keep the plane flying. We didn't want to throw the baby out with the bathwater, Krishnamurthy added. And so, we took a very deliberate and mindful approach, gave specific individuals the opportunity to come to the board in a non-threatening manner, show us what they were capable of so that we could make objective assessments and evaluations. The bank had about 22,000 employees back then. Post reconstruction, the employee roster has now grown to 29,174 as of 31st March 2025. Krishnamurthy described how the board and the management tried to keep up employee morale at a time when the bank was down, the economy was lackluster, and the doom of the pandemic was looming large. The board's nomination and remuneration committee was working very closely with the chief HR officer to get a better pulse on employee morale, he said. We sliced and diced to establish which employees needed to be there full time, how many could work hybrid or work from home. We created facilities for working from home, gave them good internet connectivity. We had to also bolster cyber security and safety measures. VPNs had to be secured because of the sensitivity of the information. We created recognition awards, opportunities to hold their town halls, Krishnamurti said. Eventually, there were layoffs, but it was less than 5%, he said. Generally, attrition was high due to the uncertainty. There were pay cuts and salary freezes. During the entire period of the pandemic, Prashant Kumar was in his office every single day, and gradually, so was the top management. In this period, the bank also had to decide what course it should take to grow going forward. Our challenge, Pentel said, was to convert a largely corporate bank into a retail bank, convert lumpier deposits into granular deposits. The bank launched premium products for salaried individuals, families, and small businesses such as Premia and a Yes Prosperity Family Account. Sometime in between the first and the second wave of the pandemic, it also started a practice of inviting 20 to 30 customers to its branches, creating festivity, having the staff dress up and welcome them. Their efforts have borne fruit. In fiscal 2021, the share of top 20 depositors was 17.5%. By fiscal 25, it had dropped to 11.3%. The share of retail and branch banking surged from 46.7% in fiscal 21 to 57.7% by fiscal 25. Looking back, Pentel recalls just how overwhelming day to day events were between fiscal 2020 and 2022. He said, I would often go inside my cabin and break down, but we'd all decided to never wear our anxiety on our faces. So I would step out of the cabin with a smile. It still gives me goosebumps thinking of that time. He remembers how Prashant Kumar himself handled the office with coolness and maturity. I don't know what storms must have been brewing in his mind, Pentel said, but he always looked composed and had a smile. On 6th April, Kumar exited with the same smile, only stronger, leaving behind a good, robust bank. Meanwhile, the Kapoors, once known for their extravagant parties and lavish lifestyles, are still battling the ghosts of the bad bank, with multiple charge sheets filed by the Central Bureau of Investigation and the Enforcement Directorate against them. That's all I have for you for now. For the print, I am Manasi Phadke.